This is Straightforward Mortgage with Madi, and today we will be covering ordering homeowners declarations page for a refinance. Now, if you want the basics of how to order your HOI for a refinance, you can go watch my video about homeowners declarations page for a purchase. I talk about the general things that need to be shifted and what needs to happen to this document. Right now, I am focusing on some of the shifty or tricky parts when it's a refinance. I guess really quick, I can go over it, the basics again here, making sure that your excuse me, that your name insured is actually your borrower, making sure that this right here, location of the insured property, making sure that it is the subject property. Now, when it comes to here, this dwelling coverage, when it is a purchase, you just want to make sure it covers your loan amount or your appraised value, right? But we'll stick with loan amount. That way we don't complicate things. But for a refinance, sometimes it can be different, okay? Because in this case, when you are processing a refinance mortgage, what is happening is the borrower is saying that if it's a rate and term refinance, the borrower is saying my rate and my term is too high. I would like to refinance my mortgage since rates are currently low. Maybe they bought their house and their rate was a 4%, and now the rates are 2.75, and they want to get in on that so that way their monthly payments will be cheaper, and then over the duration of their mortgage, they will be paying less interest, right? So anybody would want to hop on the bandwagon to refinance their mortgage if it's going to save them money. Now, here in this case, let's say when they purchased their house, they had this coverage of $200,000, but a lot can happen, right? Let's say their property value increased, and now they have all of this equity in their house, right? Because that's the other form of a refinance is a cash out. Now, with a cash out refinance, your property could have been worth $200,000 5 years ago, and now it's worth like $500,000, right? Woohoo to you. You can now borrow money from the equity of your home. I know, if you are new at this, a beginner at this, it can sound a little bit crazy, but stick with me here and I will, I'm going to let you know, I'm going to get you hip to everything. But in that case, this $200,000 wouldn't necessarily cover our loan amount if we're going to do like let's say it's $500,000. Let's say we want to do a $250,000 loan, right? So now our loan amount is higher than the dwelling coverage. What do we do? In this case, when we are ordering the updated homeowners declarations page, we are also going to ask them for a replacement cost estimate calculator. As a processor, as a mortgage company, it is illegal to ask your borrower to increase their coverage or to tell the homeowners agent that, this is too low, we need to raise it. We cannot do that. So what we do to cover us, the mortgage company, we say, give us the replacement cost estimator, or the other thing is, let me know if this policy has an extended replacement cost. A lot of policies do. It'll have some sort of verbiage that says an additional 25% replacement cost coverage, right? And in this instance, if you have this 25% replacement cost coverage, you do the math, you do that 25% times 200. I'm a little slow, so I'm actually going to pull up my little handy dandy calculator, and I'm going to say 200,000 times 0.25. Boom, $50,000. So now, because the policy does have the extended coverage, voila, now we have enough coverage, right? Now, the other part about the homeowner's deck when it comes to a refinance, you also have to pay attention to these dates, right? Because the coverage period is going to basically be based off of whenever they bought their house and when they closed. So in this case, that it's in March of 2018, let's say this loan was closing in April. So we would not only be calling to update the mortgagee clause, we would also be calling to obtain the renewal policy, because this policy is about to expire if we're in March. We're like, man, we are in March 2019 or February 2019. This policy is about to expire. So I am going to request the current policy as well as the renewal policy, but I also need for my mortgagee clause to be updated on both. Now, in the purchase homeowners insurance video, I went a little bit deep on the importance of the mortgagee clause. So if you are like, what is she talking about? Go back to that video, because I don't want to make this video too long since this is straightforward mortgage, right? So yeah, again, when it's a refinance, depending upon, because let's say we are in December of 2018 and the policy does not expire until March, then we don't need the renewal, right? The only thing that we're going to request is that we get this updated policy. We're also going to ask them for a paid in full receipt, because we want to make sure that this policy is paid for. If it is not paid for, we will request an invoice. This invoice is going to be paid at the closing. Okay, so this invoice will be paid at closing if it is not already paid, and that is for a homeowner's declarations page refinance. So I hope this was a helpful video to you. I hope I was able to answer any of your questions or concerns that has to do with this homeowner's declarations page. The importance, again, as a mortgage processor, there will be some things that you will be ordering, including this updated homeowners insurance page, VOEs, title work, which I'm going over in another video. You just have to scroll and look for it. But yeah, thank you for watching. And again, this is Madi with Straightforward Mortgage. Talk to you soon.